So now that you've discovered all the mini steps that you need to take, all the milestones, like I said in the previous video, to reach your ultimate goal, now we get into the nitty-gritty of what each of these mini goals need to be. So at this point, this is where you're going to track your expenses and kind of keep track of everything that you need to pay for or achieve financially to hit the next milestone. Once you hit all of these milestones, you'll essentially be that much further to reaching your ultimate goal. So this can be kind of a frustrating process because this is the point where you're going to list out all of your debts and your assets. You know, how much money do you have coming in versus how much money do you have going out? And this is where the nitty-gritty comes in. You're going to have to really go in there, you know, Spotify, Hulu, Netflix, all of these payments that are going out versus the income that you have coming in. And once you're able to see that, you're going to be able to adjust and essentially balance your life from there. You might need to cut something here, you may need to spend more money there, but this is essentially where you're going to want to list out everything that is coming in and going out in terms of your financial progress. Now, once you start tracking this, you're either going to see some growth about where you need to go, or you might be in the negative. You might be steadily losing money each month. And honestly, that does happen, but that's why you write these things down or take notes. Really keep a track of your expenses to see where your money is going, because this is going to help you reach your end goal. So you have too much money going out, you're going to need to cut something so we can kind of balance our expenses and maybe see some growth. So if you're already seeing some growth, then you can take that money that you have that you're making each month and you could start diversifying it and spending it elsewhere. You know, whether that be expanding your business or marketing, advertising, you know, pretty much what you have to play with at this point. But if you are in debt, I would highly suggest balancing and kind of looking at all your expenses and then restructuring and going from there. A famous technique that a lot of banks will teach you is something called debt snowballing. Debt snowballing is essentially where you pay off a certain amount of money. Say you have, I'll just give an example. You have 3 different bills, 3 different credit cards, I'll say. One credit card is $250, another credit card is $500, and the next credit card is $1,000. So you're paying the minimum payment on all 3 cards, and the interest rate's growing. You're not really making a lot of progress, but you are making payments on them. Debt snowballing will be essentially, instead of paying $25 to each of these 3 cards, pay $50 to the cheap card, to the $250, and then put the minimum payment of $25 to the other 2. So you are essentially spending $100 a month on these 3 cards. Now, since you're paying more on the first card, you're going to end up paying that one off faster. So once the small card is paid, that $50 you were using for that small card, put it to the next card, the medium card, for $500. So instead of paying $25 on both of these cards, you're going to essentially add that $50 to that middle card. So now this is where the snowball comes in. Instead of paying $25 on the middle card, you are now paying $75, that $50 from the previous and the $25 to this one. So you're spending $75 on the middle card and then $25 on the last card. The snowball continues. Once that middle card is paid off, then you can spend the entire $100 of your budget onto the expensive card. This is a good technique to knock out your debt, and once the debt is knocked out, then you can focus that $100 that you were spending on debt to your growth, to your expenses, to your advertising, to growing your business, whatever you need to do to reach this ultimate goal at the end.